Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back to the podcast Derren Martin, Director of Valuations at CAP HPI, joining us for an update on how trade values performed over the course of August. Now, anecdotally, Derren, before we get into the detail, did it feel like a return to more seasonal trends as buyers' attentions and budgets switched to summer holidays?
Hi, Curtis. Yeah, I think it has felt quite seasonal. We've had a couple of unusual years, haven't we? Or three unusual years, really. So August has been a little bit different over those periods of time. But it does feel as though more people have been on holiday this time round. We're getting back to sort of those sorts of times. We've had a little bit more supply coming in because new car registrations have increased recently. But yeah, overall, it has felt quite seasonal. It's felt a little bit slow. I think lots of people are on holiday, and we haven't spoken to many dealers that are upbeat at the moment. They're sort of saying it's been a little bit of a slow August. So, but you have to put that into the time of year.
Yeah,
everyone's stuck abroad. I think that's what it is with the issues,
especially this week. Yeah,
they can't get home to buy a car even if they wanted to.
Yeah.
But I mean, let's start off as the usual in terms of the headline trade values at 3 year, 60,000 miles. We know that they're down 2%. It's equal to £390 for the month. And I mean, what drove it, and how does this compare to previous Augusts in probably previous years and normal seasonality years?
Yeah, it's a tricky one because it's quite a large movement for August, but it doesn't feel that bad. And as I said, it's a bit slow. Demand is a bit slow. It's the holiday season. Supply levels have increased, but it doesn't feel that bad. But I think vendors are prepared to take a little bit less than they have done previously. Values are obviously still high. Go back 3 years, we were in the middle of like a really strong period for the market, and they ended up going up 30-40%. We're still sort of got cars that are way ahead of where they were priced 3 years ago. I think the highest one is sort of 70% ahead of that time. We've got cars that are 50% ahead of where they were 3 years ago, which is thousands of pounds more. So you kind of throw the demand's a little bit light, supply is increasing, and values are high. You've got those sort of three main factors that are just meaning that values are dropping, but they're not crashing. Really keen to point that out. They are just coming down more than we've experienced in previous Augusts. I think the average August from between 2012 and 2019, so those sort of pre-COVID times, since we introduced live in 2012, it was just a 0.6% drop. So for it to be a 2% drop it is sort of harsher than the average. We haven't had a drop above 2% since 2010 when it was 2.4%. So we've had a lot of stable years. So it's it feels like quite a big drop for an August, but you have to put it into context that values are still a lot higher than they were three years ago, and will remain so for some time.
I mean, that's the point, isn't it? I mean, year to date, I think we're down 7.4% year to date. So you're now in the month of coming into the month of September. That's not excessive, is it? For this time of the year?
Not at all. And for the first 3 months, values went up. In our live product, January, February, March, we saw the live movements increasing. We've had drops in the last 5 months, but values do tend to come down in more normal years, which we haven't had for some time. Values will come down. So it's just that if you look at sort of August in isolation, it is a heavier drop than you would expect, but a little bit of realigning, a little bit of vendors probably thinking one eye on September. There's going to be more volume coming back. They don't want to be carrying a load of stock in, so they are prepared to sort of take some price cuts at the moment. And also dealers maybe not stocking up in bulk and not going out and replacing it again, with one eye on more volume coming in September, and maybe some better deals around. So if they are buying, they're probably not paying what they were previously, hence the drop. We're very data driven. We're basing it on what we're seeing in the sold data. So yeah, it's been interesting times, but as I say, not a crash, but just not that dealers not prepared to pay what they were previously for cars, especially if they've got a little bit of damage on them as well. We've also reduced our average and below values at certain price points this month, because the data was telling us that dealers are paying even less for cars with engine management lights on or a bit of damage on them. They don't want them sat in a workshop. Especially in times of values dropping, they're taking a bit of a book drop. To use a sort of a cap phrase.
So that's, I mean, as you say, that's interesting, that, because it's just that caution that as you sort of values are now starting to decrease, not excessively as you point out, but that buying work is just a little bit more cautionary now then.
Yeah, that it's been like that for a while, but it is noticeable. We've based our analysis over the sort of the course of this year, and you can see a worsening situation with regards to those sort of average and below. We look at the NAMA grades on the data that we get through from the auctions. We look at the sort of the clean cars from all of the sources we get, and yeah, you can definitely see that there's been a drop off over the last few months on what people are prepared to pay for average and below. Yeah.
And in terms of age, I mean, we're talking 3 year 60, but was there any sort of standouts? I mean, the 1 year point, 5, 10 year age profiles?
It was all quite similar, really. There's been a little bit of pressure on late plate cars, I would say, and that may increase next month if there's some pre-reg activity. I think September is going to be fascinating with regards to new car registrations, because retail in the new car market isn't particularly strong. So there could be some good deals. We're starting to see them already. So 1 year values, age values dropped by 1.8%, which is equivalent to £600. And then at the older cars, 5 year point values dropped by 1.9%, which is about £230. And at 10 years by 2.4%, which is £115. So you have to sort of put those into context with those higher percentages on the older cars. That £115 isn't massive. Again, it's a drop, but it's not a seismic drop.
And Derren, before we look specifically at fuel types, were there any notable trends by vehicle sector, maybe starting with city cars? Because over the last few months, we've talked about this, because we've seen values dropping over the last few months. How did they perform over the course of August?
They've been one of the stronger sectors in the month, but as you say, they've dropped over a period of time. So they only dropped by 1.1%, which is obviously less than that average, which is only equivalent to about £100. But we've had the last 4 months that we've seen nearly 10% coming out of those cars, but they were previously the strongest performing sector. So a little bit of a realignment was probably required, and maybe that's now stabilized a bit. But I mean, it's a bit of a strap line of both Phil and mine, but the devil's always in the detail. And you've got Fiat Panda and a Hyundai i10 that have dropped by 3 times the average. So they're dropping by 3 and 4%. But also they're two of the cars that are still really high compared to where they were 3 years ago. They're sort of 50% above where they were. So it's just a little bit of a realignment, and just not prepared to pay those probably inflated prices. So just a little bit of a drop off there. MPVs dropped by 1.2%, which is about £160. So that's been another relatively stable sector this month. But again, there's been some sort of notable movers in there, with the two series Active Tourer dropping by nearly 4%, which is £500. The Ford Galaxy 4%, or £650. So again, you've got to look into all of the detail, because that's where we're looking at. The averages only tell you so much. Super Mini has dropped by the most, which is 2.4%, £250, and that's been on a bit of a downward trajectory since April. So, and I think there's a little bit of a pattern there that diesel Super Minis have seen some of the biggest drops. So C3 diesel down 4%, Micra diesel down 7%. And the Renault Clio diesel down 9%. So maybe there's a sort of a continued pushback, low volume, but a bit of a pushback on diesel in that size of car.
And what about SUVs? How did they perform over the course of the month?
I should have mentioned the biggest sector, shouldn't I, really, with regards to volume. But yeah, SUVs have dropped by just over 2%, which is about £500. Medium-sized models have been the hardest hit, as particularly where volumes are high and there's plenty of them around. So there's quite a few model ranges in that sector that have dropped this month. Hardly anything hasn't dropped. And you've got some Land Rover products probably seen a little bit of the worst of it. Jaguar F-Pace as well. It's basically where you're getting sort of multiple models of multiple examples of the same model. Buyers just not paying what they were previously. Again, price is high.
And I mean, is coupe cab convertible? Is that sort of? I mean, we had experiences previously through the sort of pandemic period, didn't we, where coupe cab and convertible really was strong, driven by people going out buying that little sports car and things like that. And you sort of you saw strength, didn't you, right through the year, didn't you, in previous years? But is that going off a little bit earlier than normal, or is it about right that it's starting to just drop now in the market?
I think it's about right, really. They've dropped. Convertibles have dropped by 2.5%. Coupe cabriolets by a little bit more, but it's this time of year. If you're a dealer, you're probably not going to be stocking up for them now. You've probably that sort of period's come. They've not been quite as seasonal this year as previously, but they're dropping by but they're dropping kind of in line with where we would expect them to, really.
Yeah, but they did have a lot of strength, didn't they, in the lockdown and
they did,
pandemic period.
Yeah, they were people sort of that were going out. If you cast your mind back, people going out and buying a toy, weren't they, really, and thinking that going to get something that makes them happy when times are a bit tough, and they had made savings from various things. But I think those times are over now. We're obviously in a bit of a cost of living crisis and interest rates high, and I think that premium sector people probably aren't going out and buying those types of vehicles in as much volume as they were previously. I think the necessity purchase is still there, definitely. But I think maybe some of those more aspirational vehicles are probably on the back burner for some at the moment, anyway.
Those accidental savers are thin on the ground at the moment, aren't they?
I think they are. Yeah, yes. I think that was a short-term thing. Yeah.
And turning to fuel, I mean, we obviously always talk about the volatility throughout this year so far for EVs, and I mean, how have they performed in the month of August? Because it is the topic of the moment, as we know.
Yeah, they've not stood out as much this month. It's quite interesting. So with the average being 2% at the 3-year point, the average movement for EVs is actually 1.7%. So on the face of it, they've outperformed the market. Petrol, diesel, and plug-in hybrids all sort of saw larger movements. So, but the devil again is really in the detail for EVs. As we predicted, you can't really talk about EVs in general now. There's different vehicles that are behaving very differently with regards to price, and we've dropped some this month, we've increased some this month, and some have been held level. So it's been kind of fascinating to see them all almost realigning themselves, really. You've got so the Mokka, the 208, and the Fiat 500 electric versions have all remained level, which I would say is a strong performance, but especially based over the last few months. The Kia e-Niro, Peugeot 2008, and the VW ID3 have all gone up by sort of between 1% and 3%, so a few £100. But then we've applied some quite heavy reductions for some of the more expensive premium EVs, so like the Audi Q4 e-tron's gone 4% down, which is £1,400. So that's quite significant. The iX1, £1,600 or 4%. I-Pace again 4%. And probably the one that stands out is the Polestar 2, which has dropped by over 6%, which is £2,000. So quite large negative movements, but they are all kind of realigning. And sorry, they're at the 1-year point, those figures, but they are realigning, and you're getting more volume, certainly for cars like the Polestar, more of them coming back into the market. Everything's sort of got its relativity. There are some opportunities with EVs, definitely, because you've got plenty of examples where they're cheaper than their ICE equivalents. And at the bottom end, maybe sort of Zoes and Leafs and things like that are now looking more reasonable value for money, because obviously they've had a lot of value taken out of them. So there are some opportunities for EVs, but it's quite volatile within that sort of fuel type.
And I mean, that's clearly, I mean, because I think EV does it is getting a bad rap, isn't it, in terms of the prices. But like you say, you can't really sort of say that about every EV, can you? I mean, clearly there is a lot of disparity. And I mean, how does Tesla 3? I mean, everyone looks at the Tesla 3 in terms of that benchmark. We saw what it's done in terms of drop. We saw it kind of stabilize. Where's the Tesla 3 now as a benchmark vehicle in the EV sector?
Yeah, it's been really interesting to track that, because we were kind of saying, yeah, it dropped by enough probably, and it's starting to get a bit of a hockey stick effect with values going back up, but they've dropped again by 2.1%, which is almost £800 at 1 year old in August. And I think retail wise they're looking okay, and this is kind of why you need trade values, because trade values that we produce, we obviously produce retail as well, but those trade values, if they're dropping, because there's just plenty of those of the Model 3s around. So if you base your pricing purely off retail, you might be paying over the odds for them. But if you look at what they're paying in the trade market, values are still dropping for those. And over this sort of period of time that we've had for EVs, we've seen some incredibly high retail prices still, but that's not been replicated in the trade market. And if you were basing your buying decision off retail prices for EVs, you'd have paid a lot too much, because obviously retail advertised prices are potentially aspirational. That's not what cars are selling for. It could even be what cars aren't selling for, because they're still being advertised at that. So you have to really pay attention to what's happening in that trade market. And EVs have been a prime example of that. And the Model 3 this month, as I say, retail looking fine, but you can get away with paying a little bit less for those, just because there's a large volume of them in the wholesale market.
So EVs, as you say, Derren, down 1.7%. How did petrol and diesel perform over the course of the month?
So diesel's down 2%, petrol's down 2.1%, plug-in hybrids down 2.1%. So all very similar to each other there, really. There's obviously lots and lots of model ranges within those, so it's quite hard to sort of pick apart a fuel type. As I said earlier, the diesel Super Mini stood out as being quite weak, but overall I think petrol and diesel behaving similarly to each other. Diesel still got its place in the market, maybe not in certain sort of geographical areas and certain ages, but if you're in sort of the more rural areas or where there's not clean air zones and you're doing a lot of miles, then diesel still has a place. And there's very little to sort of discern between a diesel and petrol with regards to valuation sort of trends, really.
And I mean, in terms of dealer, and mentioned right at the start about the sort of seasonality, but what are the dealers telling you about their sort of stock levels? We know that new market is now starting to pick up. A lot of incentives now coming from many of the manufacturers as they look to sort of return to productivity. Not all manufacturers, we must say that some are a little bit more oversupply than others, but you can certainly see through new car incentives, deposit contributions, subvented finance, etc. There is a shift in that new vehicle market, and there's a bit of a sort of a swing towards that fleet business sector that we've seen over recent months. What are the dealers now saying about stock levels and consumer demand in general?
Yeah, I think so. New car market, I think it's a struggle for retail. I think the volume of part exchanges is probably less, obviously, in August than it has been previously, but there's plenty of cars coming through from fleet part exchanges, fleet returns, because that's where the manufacturers have been focusing on the last few months. September, I think there will be some good new car offers. We're seeing them already. There will be cars diverted to fleet. They will be diverted to Motability, maybe even to rental as well. Probably not in the numbers they were in 2019 and before, but that's starting to come back a little bit. I think manufacturers are wanting to hit their targets. Going to be an interesting end to the year with their CAFE targets, whether they can escape some fines. And then obviously next year, they've got to achieve 22% of their registrations being in electric vehicles. So there's going to be some interesting dynamics there. I think with regards to dealer stock from part exchanges, I don't think anyone's overstocking at the moment. I think there's just a little bit too much volatility in the market and concern over potentially values dropping, and demand isn't brilliant. So I would say stock levels are probably they're erring on the caution, on the side of caution for those at the moment.
And finally, Derren, we're coming out of the summer holiday period, and as you've already said, traditionally a quieter time for the used car market. What's your view on how values will perform as we head into the September plate change?
Yeah, I think we're going to see a little bit more of the same. I think that so September, you've got to go back quite a few years for a value drop in September in live, about 5 or 6 years. It tends to be quite a strong month. Demand will improve as we come out of the holiday period, as you say, but I think supply levels will increase and cars still look expensive. So I think we might be in for a period where you'll see values dropping again, but not. It will be a surprise if they dropped by more than we've seen over the last month or two. So I think we'll just see a continued realignment. But it'll be interesting to see what happens there. But I do think that some trade values will probably continue to drop. But again, you'll get some of those EV sort of different dynamics happening across the board. So it's really important to look at the detail within all of those. We talk about the averages a lot, but the devil really is in the detail for specific models within our live values.
And you've already talked about part exchanges, but obviously September on the retail side, it is a good opportunity, isn't it, for dealers to get in some PXs and start retailing them?
Yeah, definitely, and that's one of the factors of sort of COVID and the years since, that they are keeping the part exchanges, and even if they're not necessarily the brand that they represent, if they're a franchise dealer, they're keeping older models and putting them back on their forecourts if they're in reasonable condition. So yeah, definitely some opportunities on the part exchange side in September, especially if there's some good new car deals that will generate those part exchanges. But obviously with September as well, finance is difficult. We're hearing of more people getting turned down for finance, and interest rates are high, and that obviously affects dealers and their stocking. Are they prepared to stock as many cars because of their funding lines being taken up and the fact that it's just costing them more money? So, and obviously will consumers buy that? I mean, you're hearing of people that are coming to the end of a finance agreement in whatever shape or form that takes, and having to pay a lot more for a car now because interest rates are high and cars are more expensive. Used cars are more expensive, new cars are more expensive. So you've got all of those sorts of dynamics coming into play as well.
And Derren, whilst we've got you on, as we record this, the ULEZ zone has just been extended today, Tuesday, to the all of Greater London. Now, did you have any sort of anecdotal view on how that's likely to impact prices within and just outside of the M25 in terms of used EVs, petrol and diesels? Any views on that?
I think well, you're going to be brave to be sort of if dealers are going to be stocking older diesels now and sort of older petrols as well. You've got to be a bit careful with that type of thing. Obviously, there are sort of age limits on them. You can still drive a diesel if it was registered since 2015, and I think it's a petrol car since 2003, 4, 5, something like that. So there's still plenty of opportunities there, but I think it will pique some interest in electric vehicles without a doubt in and around that area, especially in the sort of more affluent areas. But I don't think it's a £2,000 scrappage that the Mayor of London is offering. That doesn't really encourage you to swap. That's not going to touch the sides. If you're coming out of a car that isn't compliant with the ULEZ zone, £2,000 isn't going to get you into a car that is really. So I think some probably some pain to come for there, and it's not proving very popular. Certainly amongst sort of, I guess, businesses that are in that zone and rely on people to come in. dealerships or garages that are maybe dealing in servicing of some of those older vehicles as well are not going to be very happy. So there's probably a little bit more angst to come from the people of London with regards to that.
Yeah, definitely.
Yeah, it's certainly a topic of conversation this week, hasn't it, since it's gone live. I mean, we talked about it on the Saturday show about the pre-83 classics that are exempt from the ULEZ zone and seem to be seeing a resurgence in values because people are sort of opting to go into those, I don't know, Hillman Imps and whatever minis. I think there was all sorts of things mentioned in that article, but it's going to be interesting how this one does start to wash through. And I think you've seen it previously, haven't you, Derren? I mean, the M25, that inner circle, that you still see activity because people move vehicles out and inside, depending on demand, don't they? So you see that sort of, when ULEZ zones start to be implemented, you see the activity start to play out with the dealers as they start to look at their geographic footprint and start to profile vehicles accordingly.
Yeah, definitely, and obviously, yeah, if you're in that area, it's an opportunity to buy some EVs and to market them. And as I said earlier, there's definitely some opportunities at that cheaper end with your like your Zoes and your Leafs and that type of thing. They've dropped by so much; they now look reasonable value for money, and there's some opportunities there. And I guess we shouldn't knock the ULEZ. It's been done for the right reasons. It's just whether it's been implemented in the right way and whether it is encouraging people in the right way. But overall, we should certainly support something that is going green, and there will be opportunities for dealers to sell those vehicles. So interesting times ahead, and it's certainly. I mean, I live quite near London. It's certainly all over the news and has been for the last month and beyond that, really, as it's approached. So it will be interesting to track the sort of the retail values by fuel type over the coming months.
Yeah, it's certainly becoming political as we head into a potential election, but we'll stay away from politics. But I mean, needless to say, Derren, it's fantastic again going into the detail there, and I think you're right that we're at this point now that you've clearly summarised there that we're potentially ahead of normal seasonality now as values start to drop, but you can't lose the fact of where the values have achieved, and they're still way ahead of pre-pandemic levels. And as always, the devil's in the detail, and the trade really does show where the activity is, doesn't it? Because that is pure transactional movement of an asset value. So I think clearly we're not at a cliff edge, but we are in a period where supply is now starting to come in, and there is still headwinds in terms of that consumer demand and pressures that remain.
It's toughened up a bit. Would be a bit of a summary. Yeah. It's toughened up, and it's just important to sort of take stock of that and probably not overstock completely, and just be wary. But definitely not a cliff edge. Definitely not a crash. Just a bit of a realignment, and values remain high. And as I say, for the necessity purchase, and the market is okay. It's certainly not all doom and gloom.
Yeah, perfect. So if anybody hasn't had sight of the editorial, then it's on Derren's LinkedIn profile. You can find it there, or you can go over to the cap-HPI website and you can download the full editorial there. But that's it. So that's it from Curtis and I this week on the midweek special interview with Derren. Curtis and I will be back this weekend with the headlines as usual. So do join us on Saturday morning, and we look forward to updating on the week's headlines for the Saturday show.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by eBay Motors Group. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, and on your podcast feed. In the meantime, if you'd like to get in touch with Philip and Curtis, come on the show or send a press release, then email them at motortraderadio@yahoo.com. You can also join the Motor Trade Radio, LinkedIn and Facebook groups, or follow the podcast on Twitter. You've been listening to the Motor Trade Radio podcast, bringing you all the chatter that matters.
Bye.